Robschild, no investment advice. Welcome to the show where we view financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Monday, January 27th, 2025. Today's episode begins with Nvidia drops by 17%. Well, when you have that much speculative price priced into the company, it doesn't matter if it's a $3 trillion company. If the PE ratio is enormously high, it doesn't take much to get a 20% drop. I've been saying this for a long time, and so things like this don't surprise me at all. The headline here from CNBC, Nvidia drops 17% as China's cheaper AI model DeepSeek sparks tech rout. Nvidia calls China's DeepSeek R1 model an excellent AI advancement. What have I been saying for forever? Eventually, we don't need more of these darn chips. If you make 1,000 factories that make millions and millions of chips, eventually there's enough. And when you have a breakthrough of technology such as DeepSeek comes out and says, yeah, we don't even need that many chips. Uh-oh. Well, maybe these semiconductors aren't going to be as profitable as we had been thinking before. So with Nvidia dropping by 17%, SMH, the semiconductor ETF index, dropped by almost 10% itself. I will note that I'm almost surprised it didn't drop more, and it just tells me that this is all dumb. It's all dumb money when you have this much speculation priced into markets, and it's a tribute to how much liquidity there is still bouncing around. The fact that it can even stay this elevated to begin with, but when you have things falling apart like this, it can snowball on itself, sort of the way we saw the .com bubble blow up, but. So from here, it's a question. Are people going to buy the dip, or is this it? Is this the beginning of the end of the post-COVID AI, semi-chip, housing, you name it, it's in a bubble. Is this the end of the bubble? Is this the beginning of the pop? Along with semiconductors dropping, we've seen a lot of volatility in Bitcoin today. I'll bring that up really quick, dropping down to 97,600 intraday. We haven't seen that low for since I guess January 16th. So, but again, this is not exactly bearish yet. This is just a break, and it can go sideways or it can continue down. We have to see what happens. I found it notable that URA, the uranium index, also dropped today by 11%. I think this might have to do with, a large amount of people investing in uranium have been buying the narrative that these data centers with all these chips and all this AI computing power need all this extra energy. You've even had companies, I think Microsoft, maybe Google, have been talking about having their own nuclear power plant, something like that. So uranium getting hit as well. Very interesting. We'll get through the rest of the charts in a moment, but just wanted to point out that on Wednesday this week we have the FOMC meeting. I'm very curious if we're going to stick to what the Fed funds future says, which is still no cut for this month or not. And then Thursday, and then also, forward guidance. What are we going to see? We have some updates in the Fed funds futures we'll go over when we go over the charts in a moment. We also have Thursday GDP of Q4 coming out. This could be huge. If this ends up coming out like below 2%, for example, or even like below zero, negative, yeah, watch out below when it comes to risk assets at that point. We'll have to see. This could be a monumental day, Thursday. And then Friday we have the Fed favorite inflation gauge PCE index, the personal consumption expenditures. No major updates in the daily reminders. Watch macro update 110 with dominoes in the ball, although I will need to do an update on this likely soon when I look into my crystal ball. In that show, I also explain my crystal ball readings and my portfolio. As of today, still no major changes. Moving on to the charts with the S&P 500, we had a green candle, but it dropped before it went green. We're down 1.46%. I overheard some people talking about it being down as much as 3% in one day in pre-market. I'm not sure about that, but point is that this was I have been talking about the 6100 level as being a fighting area, and we certainly proved to have a fight there yesterday, and it looks like we were building a bull flag. This move today says no, this is no longer a bull flag. We can take bullishness in the S&P 500 off the table now. We're at the very least moving sideways, and so from here we can build a floor, build a base, and continue higher, or maybe this is it. Maybe this is the beginning of the end. I found it pretty interesting that today the CME Fed Watch tool all of a sudden flipped to, it has blue here for the most likely to be no cut still in May, but that's not exactly the way it works, because we have a 10% chance of 50 basis points of cuts by May and a 42% of 25 basis points. So you got to add those up together. So the most likely cut date now, according to Fed Funds Futures, is at least one cut by May. Yesterday it was June. Also, the rest of this was showing only one cut for the foreseeable future, and now we can see there is another cut priced in before we get to that terminal, right? And then things get kind of wonky at the end of the chart here. Again, when you look out too far on the Fed Funds Futures, you know, it's so far away in time, it's a lot less worth looking at than the ones right in front of you. TLT, still my favorite place to be, finally showing a bullish pattern here. Look at this. A higher high, a higher low, a higher high. We did it. Are we out of the woods completely? I don't know. I mean, another little pattern here that I'm seeing is this head and shoulders will bring up the 10-year note yield. Same thing. And we broke through the neckline. So this is very positive for those of us, including myself, bullish on U.S. Treasury bonds. And so here in TNX, the Treasury note yield, which is the upside down of TLT, we can see, as I have been talking about this, looking like a head and shoulders top. And I mentioned yesterday, you know, don't count your chickens before they hatch. Well, they hatched today. So we didn't just break the neckline, we gapped over it. Granted, intraday, we went back up to it and got strongly rejected. A move like this suggests that yields are more likely to continue down pretty hard from here. I mean, if NVIDIA is not going to go up 25% every year for the next 50 years, you know, maybe, then, 4.5%, 5% on a guaranteed return for the next 30 years starts to look a little more attractive. With the breaks in many markets, I found it interesting that HYG junk bonds is not showing any fear here yet. That's very interesting to me. The junk bond holders are not worried. They're not worried at all. I'm not sure what to think of this. Usually when there's a lot of volatility across the stock market, you would see some weakness here. But yeah, in the Russell 2000 also didn't drop that much. It's mostly semiconductors, but you know, it's a Wall Street adage as well. When the semis go, the rest of the market will follow. So it's an important leading indicator. So that still surprises me that we're not seeing more weakness in junk bonds at this moment. I suspect we will see it soon, but I could be wrong. Again, 3% of my own portfolio is long dated puts on HYG. Crude oil notably continuing to be bearish. I called it in these top two candles. I called it January 17th. I said this looks like a blow off top. It's when you go straight up and then you go down just as quickly as you went up, and it's playing out like clockwork. This was not a difficult one to see. I'm kind of curious how low we'll go before we get any kind of serious bounce. Typically you won't see something just, drop straight through the floor, but who knows? I also found it notable that the VIX did not spike higher than what it did. We got intraday up to $22.55, it looks about, and closed actually below 20. And so this market is the volatility market. The pricing of options contracts is sort of saying, yeah, this is a one-off. Tomorrow people will dive right back into the market. The markets will just surge back higher. That's what the VIX is saying right now. So very interesting. We'll have to see what happens. Dr. Copper with a PhD in economics also caught my eye today, dropping a good amount by 1.53%. I've been noting this recent rally breaking through what I thought was the neckline of a longer term head and shoulders top here. I thought we had broken it and retested it, and I was like, for sure we're going down. Dr. Copper said, no, we're going to march straight up against what Robschild believes. And now we're cooling off quite strongly. Sort of similar pattern to oil, sort of a blow off top looking structure here. Today was a wild day in markets, very exciting. And I'm excited to see what will happen the rest of this week. Good times. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.